So you're going to need to refresh the page when you first get this. So let's, in 2 seconds, I'm going to find that code. I'm going to just jump off here and do that. In the meantime, if you hear this, can you just type in yes in the search box? Oh, sorry, the search box in the chat room. You can hear only Cam and it's crap. Okay. It shouldn't be any different, the audio, because this is what we used before. Mario, do you want to just say something so the guys can just welcome yourself?
Yeah. So, sorry. Welcome, everyone.
Can you hear Mario as well? Is that
Take two.
Is that sounding good?
Sorry. Welcome, everyone.
Can you hear Mario as well? Is that sounding good?
Yeah, I hear myself pretty nicely on the live stream. Yeah, I hear myself pretty nicely on the live stream. Hope it's just not me, not only me.
Right, let me just update this chat to tell people to refresh the page.
All right. Well, it was a bumpy start, but at least okay. It's just 3 minutes late. It's not that much of a deal breaker, I hope.
Yeah. Pin. Can I pin with this? Can I pin this message?
Sound is good now.
I don't know. No, doesn't look like it. Okay. All right. So, guys, if you're hitting that page, you need to refresh it to get the latest one. Sorry about this. So we had a bit of a bumpy start. My machine just shut down. We tried to go down the route of using my laptop. That didn't work. So we're now back on my first machine. So fingers crossed that we've tried to do it slightly differently. Mario's in the control seat, and hopefully my machine doesn't cut out. So we're going to start going through this pretty quick. And the reason it's so heavy is because we've got YouTube, we've got Zoom, we've got OBS software, all this live streaming stuff, and the machine is probably not used to it. It hadn't been turned off for ages. So we're going to skip through a lot of what we did before, which was the introduction, and get right into it. So Mario, you've got the controls today. Do you want to jump into the first question in our Q&A here with you?
Yeah, we can do that. Let me just
Cool. Max saying this is clear and good, which is great. So we've got a good feed with these guys now. So the first question, and we're going to go through this again, guys. So if you missed it the first time, and as I said, it's going to be a raw webinar, then you're going to get it the second time. So maybe I can read the question a bit better this time as well. So I'm going to just read it out, and then we can decipher what this person's actually asking. So this is referring to the podcast interview that I did with Mario, and the fact that Mario was trading live during the podcast and did a few strange things. So I found it was interesting. He was in a trade and his rules were telling him to get out, but he wasn't out yet. I'd like to know, is he normally being more relaxed when his position size is smaller, or does he find he fights his rules normally? So is it because your position size is smaller that you feel a bit more relaxed and you can be lax on the rules, or do you normally sort of have very lucid rules that, and if so, why?
Well, yeah, like I said before, this trade was not exactly full size because I expected it to go a little bit lower. But usually, I mean, the plain rules say if the setup is failed, get out of it or hedge it. But in this particular case, the trade was not so big, so I could allow it to go deeper down, basically, and then I would just hit the emergency button and hedge the position and try to get rid of it later. That's why I did what I did. But this was just a good example because while we were talking, this was actually happening, and I didn't get out of the position even if I should. So saying things and doing things is not always the same. that was just a very, very good example, because I actually did not do what I say you should do.
Yeah, and look, it was it just made me reminded me of another question, but it was also quite interesting that you were happy to be trading whilst doing an interview, fairly relaxed about the whole thing as a whole. I mean, my question on the back of it is it because you're working with such a large balance that you feel that you've got room to move as well? Does that help?
No, I'm trading a prop trading account myself. So there's not much room to play around. I mean, if you're on a $100,000 account and you place a buy order for 20 lots, there's not much room to go. So you have to pull the plug, and you have to be ready to do it with a very cold heart. No hoping, no begging, just get it over with. This is the downside of my trading style, actually. And the second one is that you cannot get run over quite often.
Another question that came through after the interview was so if you guys want to see this trade, you can go and have a look at you can go and have a look at the video that we shot where Mario was walking through the trade. Funnily enough, we got interrupted there with my machine shutting down. I don't know why it's you, Mario, where it shuts down, but something is obviously not quite right with it doesn't like you or something. The other thing was people were going, why is he trading a demo account? Now, do you want to answer that one?
Oh yeah, this is something I actually wanted to address right from the start, because in my own chat room, people were actually informing me about the fact that you can actually publicly see that this is a demo account. And I will just quickly get out of the presentation to show that. Can you see that on the screen? I'm not so sure. This is not really real time here.
We can see the screen. Yeah, I can see the
chart. You
can
see here on the top. This shows it. This is there's a bot running. Never mind about that. Here's a demo account. This is, let's say, whatever, $102,000 balance, and this is actually a prop trading account. So when I go to my login, and I click to prop trade. This account is in Thai baht, that's why it's a 3 million Thai baht assigned, but this is the same balance. It just shows to the client in the local currency. So, but now here you see my equity limit, and you see this is $102,261, and this is the same as the account of the balance this trade demo account has, because the prop trading works like this. All the traders have a demo account, regardless if they are in evaluation or if they actually trade real money. And our firm's live servers will just copy everything the traders do on a single live account. That's how the money is being created, basically. And you can see here on this screen. Actually, let me just make that full screen. Maybe I should zoom that a little bit.
Yeah, zoom it in.
How do I zoom? Oh, cool. Never done that before.
I didn't even know you could do that on Zoom.
Yeah, I didn't know that too. No, I don't know how to turn it off. Oh, that's terrible. Is that a... Oh, come on, seriously?
Is that all it gives you? A smidgen bigger. Wow. Must be a way to do it, like rolling the mouse or something. I mean, I can see the words on the screen here, clear enough.
I just have to get rid of this magnifying glass just a second. This is seems to be some zoom feature. Got it. Just 1 second. Close window. Bam. Now we're gone. All right. Sorry about that. Yeah, you can basically see I have the account has a $100,000 balance from the initial. This is like the initial capital the trader has, and currently the balance is $102,661. That means I have the same as profit here, and this results in a payout of, this is in Thai baht, but this is 50% of of the actual profit. This is how it works.
Yeah.
But this is just to make this clear. This if I execute on this account, this is actually related to real money. The problem is that all these haters and trolls and whatnot, they are always about, oh, this guy trades on demo and whatever. But I don't really care because I don't have to prove anything. I just want to make that clear. I'm not an educator. I don't sell anything. This is just what I do, and I just do it the way I like to do it.
Okay, well, let's go into the second question. And look, to be honest, you're not the first prop trading firm that's been on the show that used the demo account. In fact, I remember another one where they definitely said that everything's done on demo. It could even be two. Now, second question. So when he enters, does he enter in a particular proportion with a particular proportion of his acceptable percentage loss for the setup, leaving him with more to add when the trade goes against him? If so, if this is the case, what happens when the trade does not go against him but in his favor, and he's only got a very small trade size? Is it then too late to scale in, leaving him with smaller profit?
Yeah, that's basically what it comes down to, because I personally, if somebody asks me directly, I do always advise against scaling in profit. I mean, I know this, a lot of people this is gonna get a lot of backlash, but because that's every educator say that differently. But if you scale in a profit, all you do is you're moving your average price up, and that's mean your position's gonna be longer in loss. If the trade goes bad, or if it makes a retest or whatever it doesn't really matter. It's just not my style. So to answer this question, in most of the cases, I will not scale in unless there is a very, very high probability that what I'm just doing is actually working out. If you have some time, we're gonna go to the probability and risk reward thing later, because this is also something I would like to address. A lot of people take that very, very wrong. I mean, in my point of view.
Okay, and you gave us an example before. I mean, do you want to show us that example of where you were scaling in on a profit?
Do I have one?
That was it. That was the one there.
No, this is also scaling in a loss.
I thought that was where you were scaling in. But your first position.
No, the pound yen trade. I hedged it in profit already. I mean, I started to sell it in while the position was already in profit, because it was clear at this point that this is not going to work out. But that's a different scenario. The first position is just half a lot, another one lot, another half lot, another half lot. I was 2 lots up at this point. Okay, here I scaled in profit, because I was actually expecting it to go up. This is kind of on this situation, but this is kind of a feeling kind of thing. But I didn't double the position at this point. I just, okay, let's add another half lot. It's not gonna kill me. This kind of stuff.
Okay, let's get on with the next question. Let's have a look at the next one.
Yeah. This is always rewinding back. All right.
Okay, I think there's another line to that. So when you discuss splitting his trade into analyst/trader, if you go to the next line, does he literally split his time into each role? If so, how much on each? And it's the next line as well. Does he allocate certain times, e.g. analyze when the market is closed? Also, does he... Yeah, that's another part of it.
Oh, sorry.
Yeah. Well, does he see one... Oh, so the trend line is one as a question.
Comes later.
Yeah. How does he see one role as being more important than the other? Okay, so this is really analyst versus trader.
Well, I'm a seriously trading addict, so the analyst part is something I cut very, very short. And like I said, I have a 7-second rule, and this is actually the analyst time frame to answer this question properly. So looking at the chart for 7 seconds, and then I make decision if I'm going to buy or sell it. That's basically it. And of course, then I'm gonna make some technical analytics about how far this is gonna go and how this is gonna work out or not, and where are the levels I'm gonna be right or wrong. But that's it. So okay, the analyst makes the decision: do we engage into this asset, the 7-second rule? After that, I'm figuring out a point of where I'm right and where I'm wrong, basically. But then it's gonna get going over to the trader already, and where I find places to actually place the trade.
Okay. And what are the? I think this question might be coming out.
Well, this was very theoretical. Let me just add something to that, because if you watch my live stream, what I just said is not true. Because I see but this is because I am like on AUCN, I trade that pair every day. I know how it moves. So if I get up like 10 minutes before Tokyo bell, I just look at the immediate price action and okay, I'm gonna buy that. That's it. So I'm completely skipping the analyst part because I remember the price action from yesterday, and I just look what happens during the US session, and then okay, there's gonna be a pullback. Let's just focus on selling that. Something like that. That's why on my live stream it appears that I just open it and sell it immediately. But this is because I have a general idea about this asset, how it moves, and how it's where major support and resistance is. So that appears to be different than I just said it is. But if I trade something new, this is how I do it. I look at it on 3 time frames, and then I make the decision. And sometimes I enter before actually. So already, okay, this is a buy. This is a clear buy. So let's just hit it. So I buy with half a lot or 1 lot, and then I start finding immediate support and resistance. Okay, because I want to be in the position like, oh, okay, this is a really good place to buy it, so let's just buy it right now.
Yeah.
And then we worry about the rest later.
So it's a lot of intuition there, really, isn't it?
Yeah, right. And like I said, if I buy like half a lot or 1 lot, I have so much room to go through. Actually, before we crashed, there was a setup on AUCN, and I actually plan to trade that while we're doing what we're doing. So you actually can see, because somebody asked in your website chat about how do I do the size, and I answer, I don't even know how big the size is. I mean, I have a general idea about how much it is, but I don't really care about the size because I have an indicator that actually shows me where my level is. And what I do, my job as a trader is to line up this level of my maximum loss with the level where the analyst before said, this is where you're wrong, basically.
Okay.
So like I have a trend line as example, and if price goes below that trend line, that's where the analyst said before, if that line is crossed, the show is over, basically. So, and what I try to do as a trader, I try to put as much size as possible between right now and when price reaches this level, and I have a visual aid on my chart to actually see that.
Yeah,
but I can only see that if I'm in a trade.
Yeah, I know, it's interesting. You showed me the other day, and it would have been great to do it on the call here today to see how you basically put one position in, and then your stop loss is miles away. Then as you add positions, it becomes closer and closer to the point where you get it to your stop, the ideal stop loss position, and it's much, it could be 3 pips away in some cases. Really interesting how you do it. Really interesting.
Yeah, maybe we're lucky and there is a setup, and I'm just going to trade it and show it that this is a very thin line, but this is actually my decision-making line. And sometimes you see on the live stream that this line is crossed by very, very far. And this means I have already counter trades open, or I have hedging positions or something like that. And then this line doesn't matter really much. And then things getting really complicated. But yeah, this is basically the general idea.
And next question, how do you draw your trend lines?
I always connect highs and lows because I'm an intraday trader, and this is all about max. And one thing is also very, very important to mention. You trade the current price. If you enter with a market position, or if you have a limit order that is like 2 pips away, price matters. Time is not relevant at all. I mean, literally not relevant. If it takes a minute or if it takes an hour, it doesn't really matter. What matters is the price, because the price decides on your profit and loss, basically. And that's why it's waiting for a candle to close is the worst thing you can do, seriously, because sometimes this reversal happen in the same candle. I showed charts. That's why I tend to make a screenshot like immediately when I enter the position, because like 5 minutes later, it can be still in the same candle, but the show is already over. I'm in the trade. I'm already in profit, but you cannot see anymore why I did it, what I did, because it's happened in the same candle.
Have you got an
That's why
example that
wait
you
for
can show
close
us?
is very counterproductive. Sorry.
Have you got an example that you can show?
Oh yeah, sure, I can. This is very, very simple to do. Just go to the platform, and then this is a 3-minute chart here. This is actually a trade I made this morning. This is actually my only trade I made this morning. But you see, this is from my original entry to my take profit is 8.9 pips, and I made 0.41% profit. So this may appear small. This is also what, if you're into Instagram and Twitter and whatnot, this is not a good way to trade, because I made 8 pips. So this is not gonna look good on your Instagram, but I trade for my wallet and not to show off anybody. So whatever, I don't really care about this stuff. But to put that in perspective, you see here the Vwap, and if I change now the time frame, let's just say to a 15-minute chart. Okay, the first entry doesn't matter because I made it pre-market. I just see, okay, this is gonna go up. Let's just buy it. But then this one here, the second set of entries, price went over the Vwap. Let me just zoom in here a little bit. Just go even smaller in the time frame. Oh, this is slow. Great, now the platform is disconnected. Never mind. Let's just go to a 1-minute chart for the sake of the argument. I personally prefer the 3-minute chart. We're gonna get into it later. So you see the price, I bought this pre-market, that doesn't count. Price went over the Vwap. It hovered around below a little bit. That's something I just know from experience. If that happens, it will break through. And it actually did, and I did something else, so I didn't pay attention, so I entered a little bit late. This is like 1 pip or something like that, 0.9 pips. But you see, there's a structure building below the Vwap, and then it broke through, and then, oh shit, I'm late, and I just bought it. But if I go now to a 15-minute chart, just as example, there's just no way of making that out. Okay, this is like hindsight example. There was a wick down, but this candle here where I entered was still in the process of building. You cannot see my reason to do that, like the consolidation below the Vwap. You cannot see it at all. That's what I meant. Waiting for a close is a very bad thing to do if you day trade. You have a price level. For me, this is just a Vwap, and you just have to execute. And it doesn't really matter where your candles are or how they look like or whatever. This is just, see, this is a 3-minute chart, and it looks already completely different. I just have the experience. I know this is gonna break above, basically.
Right. Just by looking at it, you know.
The 1-minute chart more or less confirmed that. And then it went up to my first target. I didn't take profit because my actual target is up here.
And
then it went back to the Vwap, and I bought it again.
How did you draw those targets? How did you get to the first target and the second target?
This is actually a good example because this is a bad one. I didn't have a target. Like I said before, the setup is there. Let's just buy it. I bought it pre-market. It made the reversal after Tokyo volatility stopped. So I bought it again, and you see this is just plain volatility here. when the Vwap is on my chart is a little bit shrinked. This is just plain opening volatility, and then it made the reversal and I bought it again, and it went straight to my first target. So if I would go all in on this reversal, the trade would be over on the first target already. But the reason I set this target is actually a horizontal one. If I go like to a 30-minute chart, and here you see this is a previous high. It's not exactly the previous high from before, but if you go back like here, this is like on July 29. This is a consolidation area, and I just took the low of the consolidation area. And I don't really into horizontals actually. But you see, there's a lot of places where price bounced.
Okay, yeah.
And I just try to figure out the middle one of them. So let's just take that one as a target, because I didn't have a clear target. And, well, look at that. It hit it. But I chickened out on that one.
So you don't look for like, how do you look for trends at all? Sort of is that your trend line?
It's always trend lines.
Yeah,
always.
So the trend line gives you the trend, so you know you're going up. But you wouldn't sell at that peak at the top there where the exit is. Why would you not sell there?
Because we are still in a bullish area. Yeah, a lot of people do that, but I don't.
Yep.
Actually, one of the very famous Vwap strategies is to sell it towards the Vwap or buy it towards the Vwap, but I don't really do that. I got burned so many times, and I cannot really do that because my position size, like, okay, let's just pick another example. This is actually a very bad one because this actually worked out. I bought it here again. You can see it, like, this is really tiny. I bought it here again because there was a Vwap reverse. Let's just buy it again. And I went downstairs to make me a coffee. And I didn't want to take the loss because I stopped streaming already. And I just enabled the trailing stop. And I got stopped out. And look where it went.
Oh,
this is so depressing. but this is just how it is. Like, yeah.
Another question that's just come in from Drazen is, have you ever traded tick charts to remove any open-close reliance? Actually, he said, or actually open high-low close reliance.
No, like I said, candles are very bad to indicate it, as an indication, even if they are on tick chart. And I do trade tick chart. Like my Nikkei index here is a 25 tick chart, and you see here's the Vwap too, and it works perfectly.
Righty-ho, should we move on to the next question?
Yeah, next question. Flip over here. Okay, this time it works. Great.
What else do you use to find entries? We sort of talked about that, haven't we? It's like, well, do you want to answer that in any other way?
Entries, yeah. I don't. I'm very mutated to the Vwap entries, even if there are other entries. But if you take like the trade of today as example, why price went below because I knew here is technical support, so I just allowed it to happen. But if it will go below that, I will just call it a day or hedge it or whatever. Probably take the loss because this would be a Vwap -5, and my average price was around the Vwap, so I would probably have taken the loss at this point, because this is obviously, and a 5 pip range is not that easy to find.
And when
I mean, it is easy to find.
And when you say
you know what I mean.
Go below, is that literally what, one tick below, or do you want to see it sort of pushing below or closing
this is
below?
depending on the. Oh, sorry, I interrupted you. This is depending on the asset. On AUSIN especially, that's why this is a failure. On AUSIN, 1 pip, 1.5 pip max. On gold is like 40 points, pips, whatever. On pound yen, it's maybe 3 pips. So this is an experience thing, because it's also based on the broker's volume. So if I just said AUSIN 1.5 pips and you're done. But this may not work for Pepperstone or for another broker because of that reason, because they have different volume information, different tick data. So this may not work out on a different broker. So it's just this experience thing. Like if you open the Vwap on TradingView, you're not gonna have that good entries because they get the data from Rwanda and it's just terrible. I mean, you still can trade it, but you cannot smash in 20 lots with 100k accounts just because price is on the Vwap, because you have to allow it to go over it like by 3 or 4 pips. But on RCN, I'm not gonna do that. I just did it there because this was right after the opening, and I had a technical reason to allow it. And this is like the intuition thing. But if you trade it like a robot, like okay, then you have your averages, like okay, RCN, like I said, for me, RCN on IC markets with C trader, 1.5 pips. If it goes over, show is over. And if you have a 1.5 pip stop, you can put on some meaningful, well, crazy size.
Yeah.
I mean, let's just go somewhere where the
1.5 pip stop with a 8 pip profit. I'm basically 8 to 1.
Let's just do some hindsighting, like some hindsight trading. Like here's a blue lines for me mean this is a resistance from a higher time frame. Let's just trade this for the sake of being a hindsight trader. And if I put here, like this went over, this is actually a very good example. Because I did trade it, but that's besides the point. The price went over, it made the reversal.
Should I zoom in a little bit? There you go.
Yep. Yeah. The problem is if I zoom in, the chart gets shrunk. Okay, I made a previous entry, so you see it's just 50k, it's half a lot. Meaningless. Okay, but then the Vwap reversal actually happened. Price went over the Vwap and it retested the Vwap, and then I started to buy it with some size. So let me just put a limit order here.
Order pending.
For where my order is. Okay, and I just said 1.5 pip below Vwap. That will be here. Let's just move this old line here. Okay, 1.4 pip below Vwap. And if I put the stop now here, that would be -2 because I entered a little bit late. And now let's just add size. So let's just assume this is going to be a single trade. We're not going to hedge 0.5%. That would be realistic. So now I'm going to add 0.5% to this trade, and you can see how much I can add. So 0.54 risk at a 3 million position. That means 30 lots, but it's going to be too big. Let's just 2.6 million. Okay, 0.47 because you're going to have slippage on exit and blah, blah, blah. So I can add 26 lots on this position, and I'm going to have a 0.46% loss if the stop is hit. Okay, now the order is placed. You see it's 2.6 million Australian dollars. That means 26 lots. Okay, now not just play it out. If my target will actually being hit. Let's just assume the price would go there. This is hindsight anyway. It doesn't really matter. So if I edit the position now, look, this is a 0.46% loss versus a 5.53% profit, and that's what I called risk reward. And these setups happen like all the time. You can see it, but you cannot trade them really big. I would not trade them with. I mean, if you're just starting to trade this kind of trades, I would say 0.2% at max, because you're gonna get run over like all the time. But even if you have 10 losers in a row, it doesn't really matter, because the one trade that works will pay for everything and some.
Now, Paige is asking the question: what are you calling the Viva? Is it the dotted line, please? So it's the Vwap. VWAP. It was written on the slide. Yeah, it is the dotted line. How does the Vwap work again?
It's volume weighted average price. It's like a moving average, but it's based on the volume that's being put into the market at this point of time. And that's why the Vwap is always at the same price. Let me just make a horizontal trend line here. Just make it very big one. So, and let's some really ugly color. Let's okay, this one, and I'm gonna make a vertical one here too, just to make a fake crosshair, like here and here. So this is the Vwap at this point of time, at the same point of time. So, and if I switch now to a 30-minute chart, this is the same chart. I just switched it to another time frame. You see, the Vwap is exactly at the same place. So it doesn't really matter where you are, what time frame you're on. This is completely unrelated to the time frame. This is the volume weighted average price at this very point of time. So it doesn't really matter what time frame you're on. Unless you use MetaTrader, then yeah, you're SOL again. This just doesn't really work on MetaTrader. But yeah, you get the idea.
Yeah.
Like if I go now to let's just go to where's the trend line? I made them very fat so we can find them easier, but I don't. There is it. There's a fat one and there's the other one here. Now it's a 3-minute chart, and if I go to like a 1-minute chart, where is it? There is it. You see, the Vwap is calculated, and you see it's exactly at the same price. It doesn't really matter what time frame you're on. But of course, the smaller the time frame is, the more precise your entry is going to be. Like I said, 1.5 pip stops. Mention 1.5 pip on TradingView or Forex Factory, they're gonna laugh at you. They're gonna mark you as crazy.
Yeah. It is very tight. It's very tight. It's very tight.
Yeah.
Right, next question, Mario.
Oh, next question, yeah. Where is it? There is it. Exit was the next question, I guess. Yeah, how do I pick my profit targets?
Is it always
I have
the same
to show
one?
that too.
You showed us the levels. Is that the same for every single time, or?
No, profit targets actually work differently. So I enter on the Vwap because I have the volume advantage. I can add really large size, and I have the advantage that I know, like within minutes, if that's actually gonna work or not. So you're not gonna sit there all day. Is this gonna work? You're in loss, or this is gonna drive you crazy because your positions is red, and this is just not gonna happen in this kind of trade. They either work or they don't. That's it. I mean, best case scenario. Sometimes there is some consolidation even on the Vwap, but it's a different story. Let me just go back to my charting, but now I have to switch to my default view. Let's just pick something I don't trade usually, like whatever. Euro dollar. I don't trade that. Don't ask me why, I just don't. All right, so I have on my monitor chart, like I have 12 small charts, and I see when prices hit the Vwap, and then I open it here, and let me just make this one here smaller. Only these 3 charts matter here. This is my 3-minute chart for enter and exit, and on the left side I have a 30-minute chart where I have the weekly Vwap on, ignore it, and a 4-hour chart where I have moving averages on, ignore them too. They're just like I said in the interview, this is just like, okay, you're driving in your car the road back to your home, and you still have the navigation on, and it shows the map, but you know the road. You can drive it drunk or blind or whatever, but it still shows the map. And this is basically what the moving averages are. I have them on the chart, but they're pretty much meaningless. They just show me, okay, there is maybe some reaction to it or something like that. But what I basically do, let's just say, okay, this is let's just assume a hindsight sell setup, price crossed the Vwap, price retested the Vwap. Okay, let's just sell it here. I will just press the button like immediately, and then I go to the 30-minute chart, and I'm just gonna find a plain technical exit by just drawing simple trend lines like this, and we're done. It's really that simple, seriously.
And why did you decide?
One more thing I would like to add. what I do is always trade on a negative side. So you always focus on your losses, and on the targets, it's going to be the same. I always try to find the nearest exit and not the best one. Because this kind of trades can go really bad really fast. And on this euro dollar trade, I will be out of the trade already, because here is some structure that makes actual sense. Like here's a previous top, it being crossed, it's being retested, and blah blah blah, and we're gonna here's a retest, and it's gonna back down. So this will be my exit. If I go back to the 3-minute chart, I would have exited around here. And here is S1 pivot point, so I will probably exit it here. So this will be like a 15 pip trade.
That was going to be my other question, is like, when you exit early, is there anything that's other than a gut feel that will get you out?
No. Just the voices in my head. And, which is a bad thing, I have to admit. But actually, before I didn't do that. I had a technical setup from the 30-minute chart or from the 15-minute chart, and let's just let it ride. And then you have this massive one of our trader guys in the trading room. He's currently in Australia, actually. He does that. He make Vwap entries like with massive sides, and he just let them run, and then he have like profits like 30% on a single trade. But I don't do that. But this is most certainly possible.
Right, next question, Mario.
Yeah.
Best way to transition from small accounts to large prop firm figures.
That's also something unrelated to the prop, but we can get into that. What I do is, I'm just gonna show it to you. This euro dollar trade looks actually pretty nice. Look, yeah, now I can also show the indicator. Let me just buy that with half a lot. I'm just gonna make a market order. I hope you didn't hear that. If I change to my default profile, which is this one, so what my indicator shows, there is my average price. There's just one order now, so there's equals to the order, but you don't see an order. It just show here on the bottom of the page, I'm buying euro dollar. It doesn't say how much I buy. It doesn't say anything. It just show the average price and the fact that I'm buying it. So, and it's just buying it, buy it again. No, I'm gonna buy it again later. And somebody asked about how do I size, and this is I have to go to a larger time frame. So what my indicator does, it plots a line here, and this is where my 0.32% loss occurs, because I just buy it half a lot, so this is really far away. And this is how I size. I find a place where I'm wrong, and I keep adding to the position, because if I add now to the position, I will do that right now. Let me just I have to 30-minute. This is very small size. That's why the line is. Can you guys see the line here? This is my buy line. This is where my maximum loss occurs. It's not maximum, but it's close to maximum. This is just something. Okay, guy. Now you have to be really careful in what you're doing. Basically, this is what this line tells me. But this is like 100 kilometers away, so I'm just gonna buy more. Let's just do it right now. Wait a little bit. Yeah, let's just buy more, like right now, which basically means I'm gonna scale in and profit. So you see the line moved up by half, because I bought half a lot and I just bought another half a lot. So the distance between my average price and my loss is now half, because I doubled the position essentially. If I go now to a smaller time frame, so you see my average price moved too, but I don't see the position. I don't see how much money this is gonna cost me. I just see my average price and where my maximum loss is gonna occur, which is really, really far down, because this is a very small position. But you get the idea, basically. So let me just, I'm just gonna trail that out or something like that. Yeah, I'm just gonna trail that out.
So you just use some sort of algorithm to do that?
Yeah, I just set a trailing stop with -1 to all my positions, which are 2 at this point. But again, I don't see where the stop is. I just made the decision. I want to get out of this trade. So I press the button on my stream deck, trailing stop -1. So it's going to set from the current price -1 a trailing stop. So if price moves up now, the trailing stop will move. Let me just enable the positions so you can actually see it. But the point is, I don't see these positions. I don't know which position is in profit and which position is in loss. And that is key to avoiding psychological impacts. Like if you trade with a $100 account and then you move on to $1,000 accounts, you're going to have the same problems. I'm just going to close them here.
Order filled.
Okay. This was probably a loss. Let's just refresh it. This was a loss. 0.01%.
Okay.
You get the idea. So the idea is to avoid anything that shows you a money amount, dollars, pips, whatever. Ignore all that. You just see, trade what you have in front of you, and the size doesn't matter at all. And then it doesn't, at some point, if you're really good in ignoring the numbers, it doesn't really matter if you trade with 100,000 or with $100, really. That's what this comes down to. And my way of ignoring that is not to have any dollar amount to show. I have a position list, but it's on a different chart, and I have a Discord on top of it, and my mixer, and an additional chart, and my Winamp, and my OBS, and whatever. So I have to do a few clicks to actually see my position list. Because if I'm going to see it, oh, this is a $2,000 loss, but it's not really like, you get the idea. It's just a normal loss. It's not like major.
Yeah.
But if you see the number and there's, oh shit, this is my rent, then that is where things start to get out of control very easy, because humans are really bad in this kind of stuff. They're always associating stuff you can buy with the money you can see on your trading account. I do that too.
But you've
like if I have 3 or 4 losses in a row and I say, oh fuck, this is gonna 6 months of my rent. What I'm doing here? And but it doesn't matter, because it's just a percentage. And you have to get over that. And my way of getting over that is ignore everything that looks like money.
Here we go. Got a question here, which I think the next question asks as well. Like, do your trades have a hard stop loss, or do you manually exit your stop loss price if your stop loss price is hit? What's the next question? Because I think it answers that.
Oh, this is probably a stop question too. Yeah, I do hedge. We come to that later. I do hedge, and but if you're just starting doing that kind of stuff, it's better to just use a stop loss. Like, because hedging can become very complicated at some point. I have on another chart, I have an algorithm, a small bot, which is called Swingfish Helper. You can download it from the website. It's all free, which actually does exactly that. It will hedge my position once my loss of this symbol reaches a 0.43% loss. So if I don't take action before that loss occurred, the bot will do it for me. It's like an emergency stop.
Yeah.
But it will hedge me. But if I edit the settings of this bot, I can also set just close it. So which essentially will be like having a hard stop. But this is based on your profit and loss. And this works only if you actually have the position sizes based on your wrong, on you being wrong. Like I have this tiny line which is sure, okay, my maximum loss occurs at this level, but my wrong level is actually higher, so I can put on more size, because if my maximum loss occurs, I'm already really, really badly wrong. So there's no point of letting the price go there. So I add more size until my loss level is at the price where I'm actually wrong.
Right.
And this is part of maximizing your potential.
And when you hedge, I mean, I think we talked about it in the very first attempt at this webinar, you were saying, like, if you've got a 4 pip in the negative, then you hedge, and the debate around why don't you just close the position if you're going to let the hedge run and then close them all together. What's the thinking about that? Do you at times make your money back or make the loss back, or does it get tricky?
Yes. There are two parts of that, and that's why I'm doing it. Number one is psychology. If you, let's just assume your trade goes bad. You're trading whatever strategy, and your trade goes bad. Immediately, you're gonna try to protect yourself and blah blah blah, and then you're gonna make bad decisions. And what hedging does is make the decision for you. It basically pulls the plug. And then now this like trading view and Forex factory argument comes in. Why not just take the loss? Well, I don't like to lose money. That's why. That's it. That's all I'm gonna say to that, because this is gonna be an endless argument of all these people like saying, why you not just take the loss? Well, I don't want to like to lose money, and that's why I don't take the loss. End of story. But to put this, I don't want to appear like a dick. If you just take the loss, it will work just fine. You just take the counter trade, and you make your money back. But my strategy is a little bit different. I'm gonna let's just make a fake trade that failed. Like let's just assume the price action before here doesn't exist, and I can just blend it out. All right, here we are. It's just hindsight stuff, so please don't throw rocks at me because of that.
I mean,
really
Fred's asking, how do you clear the hedge positions, which is the question I was thinking
about.
Yeah,
I just wanted to show that. That's
cool.
Yeah, that's good. Yeah, because that's actually my next step.
Yeah.
That's why I'm making this fake position here. Okay, I can actually place an order. This is not far enough. It's quite far away. Let's just this is what is that? Nikkei. It doesn't really matter. Okay, let's just assume. Let's just assume I trade this Vwap reversal here. Let's just assume I trade this one. Like, let me just make a. Okay, I trade. Price comes up and retests the Vwap, so I'm gonna buy it right here, where this yellow arrow is. And price goes up, yay, we are in profit, like immediate profit. This is just a hindsight setup. I just want to demonstrate how I get out of positions. So you see, the trade was in profit immediately, and then it's gone to a loss. And let's just assume after this low here, whatever. It's just for the sake of this argument of hedging. Let's just say, okay, I'm gonna get hedged here, around here.
Yeah.
So, like I said before, I only see the average prices on my chart, and if I'm hedged, I see a red line and a green line with the average prices. That has the following reason: if I scale in like 100 times, you cannot possibly find. You cannot do the math if you don't know where the averages are. So let's just assume these are the average lines. And what I do is I just measure the distance between these lines. This is 96 pips. Oh, this is the Nikkei index. That's why the range is so big. So, and what I'm doing is now I just have to find a setup where this 96 pips fit in. And I just find out on a larger time frame. Okay, like let's say here is some support. Okay, this is all hindsight again. This is not really something I would like do in like a few seconds. So let's just make something up. So this is completely wrong trend line. It's just for the sake of the argument. So okay, now we have a target here, and this is okay. This is longer than this is like 50 points. So okay, let's just trade this, and then there's gonna be a new reversal happening right here a few minutes later, which is a short setup, and my trend line says okay, it's gonna go 570 down. So price goes up, and instead of making a sell, I'm gonna close my buy position at this point, basically taking the loss, which is pretty small. Like, okay, this makes no sense, but yeah, I would close the buy position originally in a loss here, and let the sell position just run until it paid for the original buy loss. and then just close it all. But I'm gonna do that, and that's why I have such a small limit of the original size, because instead of just closing the buy, I do martingale basically. I will open another sell position, basically double the original one, and take profit at the moment it paid for the loss.
Right.
This is basic, straightforward damage control. So I don't even write it all the way down. I just make this trade because there's a high potential. Price is gonna go down. I make a short trade because of that. But I'm not gonna write it all the way down. The moment I'm break even, meaning the sell position paid for the loss of the buy position, I just gonna close the trades.
And how do you
because at this point, this is plain damage control. Instead of taking the loss in the first place, I just trade my loss back, basically.
And how often does that not work and the sell order doesn't?
Yeah, it doesn't work sometimes or another. And then you have to be iron fist type of trading and just take the loss. If it doesn't work, you have to take the loss because you have double the position on. That means you're going to carry double the loss, and you closed already a loss before. So you have to have. If it doesn't work immediately, take the loss, because this going to cascade up really fast.
Okay.
So if you're not used to that, set a stop loss and get over it, because hedging and reversing hedge positions can become very expensive very fast.
Cool. Look,
sorry, let me just quickly get into the psychological part. Let's just assume this is not a setup. Well, it isn't. I just made a trend line to make my point. But this isn't a setup. I would not trade it because nearby horizontal support, blah, blah, blah. Too many reasons not to take the trade. So let's just say we hedged on this long position. It doesn't work out. But you just remove your take profits and your stop loss on both sides, and then you do something else. It doesn't really matter. If you don't find a setup immediately, it doesn't matter. And that removes the pressure from you. Like you carry the equity loss at this point. But if you cannot get out of the position, like now, okay, now we are in Asia session, something like that, and there's no volatility, and just never mind, just move on. Wait for the London session or for the US session, and you just need to find a setup where the distance between your buy and your sell fits in. A technical setup, and you just trade it to get rid of your hedge.
Like revenge trading. So it's almost like stopping that. I had a loss. Right, I'm going to revenge that loss.
Yeah, exactly. And you just don't do that. Okay, there's no clear setup to make this trade. Then don't make it.
Yeah.
Just let it be. Trade something else. Go to the pool. Do whatever. Because you're hedged, the loss cannot become greater. And except during the rollover when you have to pay swap. But come on, seriously, if you worry about the swap is gonna make you a bigger loss, you're doing something fundamentally wrong. I mean, just to be clear about that, because this is the next trading view or Forex factory argument. But then you have to pay swap. Yeah, so what?
Yeah.
If I cannot get out of the position today, I have two choices to do. Close the hedge, take the loss, basically, and pay the additional swap and pay the additional spread and commissions. But it's still better than hoping for the trade to go into your favor, or pay swap and trade it tomorrow.
It's
like I said, after you hedge, this is just about damage control.
Yeah. I
just don't want to lose money. That's why I'm doing it.
Yeah. Dryzen says he got it one, like I gather that there's a large psychological component to it, which we've just gone through. So now there was one other question. Any thoughts on using linear regression for a trend?
No, not really. I'm doing really the hindsight thing. No, not at all. I'm actually a range trader. I'm not a trend trader at all. I mean, if there is a clear trend established, let me just go somewhere like here. Okay, this is a clear trend, and there's some support, and okay, let's just do that. This speaks for me, of course, and maybe I'm gonna trade to the next support, or I'm not gonna take profit at immediate support or resistance or something like that. But I'm by definition, oh, look at that. There is a beautiful Vwap reversal happening just now. Never mind. This is Euro. I don't trade it, so this is this could go bad pretty easy.
Right. There's a few more questions now. I think those are all the trading questions, guys. Have you got any other trading related questions before we move on? There's a couple of questions around the prop firm Enfoid that Mario runs, and there's a trading nut offer on at the moment. So we'll go through. Oh, there is one more at this point.
There are two more.
Okay, yeah. So that's sort of, you've answered that one.
Oh yeah, this is also something I get asked like literally 5-6 times a week. Do you have a profit target? No. That's the worst thing you can do. That's like how to say that? It's like there's a pile of money outside your house, and you're starting to get it in, so the wind is not blowing it away. And now you say, okay, I have 10 grand, so let's just go home and watch TV. Will you do that? You will take it all, right?
Yeah.
So why do you have a profit target on your trading? That makes no sense. Everything you do as a trader has to be on your losing side, because making money is so easy. You just you just make the trade and you wait for take profit. There's nothing you have to do besides watching Netflix, talking bullshit on Twitter or whatever. But you don't have to do anything to make this money. It's just gonna go its course. There's nothing you have to do. You just wait until take profit happens. When your work starts is when you're in a loss, when you have to do damage control. And that's why you must have a maximum loss and never have a maximum profit. So many people are going to make 1% a day. It's going to be 26% a month. It's not going to work. If you say, I'm never going to lose more than 20% a month, that's better. But if you say, I'm going to make 26% a month because I'm making 1% a day, that's never going to work.
Yeah. Yeah.
I had days. I mean, you can see my trading log. I have a real-time trading log. When I'm trading, I have my blog, a draft, which you can see on the website. And when I do something, I make a screenshot, I put it on the blog, and you can see it before I press the publish button. And I've lost the point I wanted to make.
Don't ask me, mate. It's midnight
here.
Oh, yeah, I'm struggling.
I have days where I make 12% in like literally an hour. And okay, that's like the moments. Okay, I'm out of here. That's it. I'm gonna just take this money, because this is like happened like instantly. Like there is some news. I had a Vwap reversal on the Aussie dollar, and then the Bank of Australia governor said something, and then price just shoots way over my target. And okay, close all. I'm done here. That's it. End of show. But end of trading. That's a different thing. But if you're doing your work, I mean, you're doing real labor. Why would you stop? I mean, if you're on a running streak, like there is a trend establishing, there's one reversal after another. Like there's a reversal, you take profit at the next support, and then it's just the moment you take profit, price drops back right to the Vwap, and you buy it again, and it goes right back up. Like let's say there's a range building or a flag formation, or a triangle or something like that. You just stay into the triangle until it breaks out, and you just do it over and over again. This is like free money. I mean, why would you not do it?
Yeah, it's good advice there, guys. Right, let's have a look at the next page. There's a couple of questions here on your prop firm. What have we got?
Oh yeah, the mechanical thing. This is actually very mechanical. But only the entries are mechanical.
Yeah.
Mechanical. And you have to have some idea about the structure it's forming around. So you cannot make just to answer this question, you cannot make a bot that does that.
Have we got any more questions? No, that's it. Okay, yeah, here we go. The prop. Right, okay, so...
Yeah, should we wait? Somebody maybe have some ideas about trading, so we're going to move on to that, or just do it?
Sorry, what do you mean?
About the trading? Are we done with trading?
Yeah, we're done with trading. I don't see any more questions coming through. So thanks for the questions, guys. We've done an hour on that as well, which is good. It's good to see my computer hasn't crashed again.
It's not on fire yet.
Yeah. So one of the conditions for your prop firm is to have 50% profitable days. How might a swing trader fare with this? Personally, I find swing trading some trades that ultimately winners profitable can be negative equity for a few days and then turn profitable. Is 50% profitable days equity or bank profit? Is the prop firm more suited to day trading? What's your view on that, or how does it actually work?
Yeah, this is a bad thing because I have to say a hard no to that. The current offer is only for day traders. The firm has a few swing traders, but they all trade futures, and this is a completely different system. I mean, the technology is the same, but it's in-house only, and they're trading much larger balances. You need to have a license to do that and this kind of stuff. So we just decided this is not going to cut it. So we limit this to day traders only. Sorry about that. I'm working on a strategy, on a system that will support swing traders. But as of now, the Forex remote pop trading system works only for day traders.
Okay. So do any of the paths offer some form of training, either trading psychology or both methods?
No. And that's also very good that this is being addressed, because the company in general, myself, like the Swingfish project, like on the Swingfish website, everything is for free. Everything I do is for free. Everything I say is for free. There will be never any charge for it, ever. There is actually a free money offer too. I'm serious. You're like if you're a gang member and you're signing up with the Swingfish project IB links for IC markets or whatever, I'm gonna actually pay you 100% of the money that comes in from IC market back to you, straight back, which makes it essentially free money, giving you a 17% trading discount. But this is not marketing. This is just, I want to be very, very clear about the conflict of interest. I can make money myself. I don't need to take $3.75 from somebody who don't know about trading. This is just the lowest of the lowest you can do, basically. I mean, if you're running a proper school and everything, like the Duomo guys do, and there are other ones. I don't say the educators are crappy or whatever, but most of them are. And I mean, I don't want to sell my holy grail, blah blah blah, for $9.99, because this isn't it. The holy grail is yourself and not anything else. So that's why there will be no education besides the Swingfish project. You join the chat room, you can ask whatever you want. There is no question dumb enough. There are so many people who are happy to help, and we try to keep it as casual as possible. No trolling, no bullshit, and no sales. But the prop trading itself, you have to know already what you're doing. And there is a clear cut. So there's not going to be any education, because most of the competition, they do that. Like, okay, you're going to enroll and you give us $500 and then we're going to teach you how to trade. And after we're going to successfully have trained you to be a professional trader after 3 months, which is already complete nonsense, then we're going to give you our money to trade it. This is just, come on, seriously.
Someone's actually asked the question here, which you sort of touched on there. So this is Audio Beast. If you're a part of your Discord, you can get a rebate on the commissions. So do you need to be part of the Discord to get the rebate on?
No, you just need to have an investment account with Enfoid. But then there's going to be a cut, because I'm not Jesus or whatever. I want to make money too. So if you don't contribute to the community, you only get 80%. This is like Payback FX or my FX book does that too with broker rebates. It's basically the same system. But if you're in the community, if you do a contribution, like you are there and you're being part of what we are doing here, like all this no conflict of interest thing, and everybody helps everybody, and we're gonna sit up on the bonfire and burn marshmallows kind of thing, then you get, I have no interest in taking money from you. That's basically the idea.
Okay, have we got any other
Because
questions?
you're paying already by being a part of it.
Here we go. Join the community, contribute, learn, and grow together. Yeah, that's basically it. So, are there any more questions? I don't think there were any more on the prop trading. Maybe there one or two. Do you want to? I can't remember what I had in there. I've got a vague feeling there's another.
Working. This seems to be the last one, yeah?
Oh, the last one. Is it? It usually goes to a black screen.
Oh, really?
Oh, I couldn't. No, sorry, that's probably the last one. No. Yeah, I do think there was only two. Do you want to jump into the what we've arranged for the guys for the Trading Nut listeners, just to run through that page? Oh
yeah. I just want to quickly go into log on to for another user. Brilliant. Because this is my account, and my accounts. You see, I just have some accounts. My day job is basically rescuing live accounts that are pretty much dead. So that's why my profile looks kind of terrible. And I asked one of the traders before to log in as him. There we are. So this is a proper trader from Singapore. This is okay. Never mind. So here's $25,000, which is this is actually an investment dashboard where you can see what's what. You have the account balance and how much profit you made, and so this account is 6 weeks active. That means you got interest and dividends for 6 times paid already, and made a 3.3 Singapore dollar profit on this 250 Singapore dollars he had paid in. Anyway, here's prop trading is active for this account. So you just go there, and then you see immediately your stats. So this page loads up a little bit slow because it's in real time connecting to our management servers and downloads the real time data. So this account is actually in loss. This is also something I wanted to show. If you're on payday, this account has payday on the 15th, which is in 15 days, 16 days. If on the 15th the account is still in loss, you just get nothing. That's it. There is no compensation of any kind. If you don't break the rules, but your account is in loss, the only thing that's happened on payday is you don't get paid. That's it. So there's I see that many times. Okay, our futures trader has that too. They have insurance and stuff like that, but there is no compensation. The money you have on your account here. Let me just go back to the dashboard. Like this user have 277 Singapore dollar on his account. This is the trader's property. I have legally no right to take that money. This is like a savings account in the internet, and it gets paid interest. So there is no connection whatsoever, technically and legally, between the balance you have on your Enfoid account and on your trading account. I just want to make this clear. So the trader can just log on and make a withdrawal for this money. That's basically what it comes down to. So if you enroll, you are going to have to trade the evaluation first. Evaluation means this is the first account. This is very hard to do because you have a 10% profit target. You have to make in 30 days. And the same rules applies. You have to have at least 10 trading days, day trader, 10 trading days in a calendar month. You have to be profitable for at least 50% of these days, and you have to make 10%. But this is just to put pressure on the trader. This is not an actual target. If you trade live, there's no target. Like I said before, you didn't make any money, your account is in a loss, you just don't get paid. If you have a $1 profit on your account, you get 50 cents. If you have a $100,000 profit on your account, you get 50,000. That's it. No rules, no fine print, nothing at all. But you have on the demo account you're trading, you're gonna get in real money paid to your Enfoid account. Anyway, back to the evaluation. This shows here to have to contact support because this is already finished, because this is a live trader. But you see, the account has to be in loss. You cannot have a higher drawdown. This is a $25,000 account, by the way. Your daily drawdown cannot be lower than 5%, which is $1,250. Your maximum drawdown cannot be higher than 10%, which is $2,500, of course. And here are the actual values the trader had. He traded for 10 days. This is actually a pretty good trader. So he actually made the profit target, I think in 4 days or something like that. And he just traded in microlots for the rest of this day just to meet the requirements, the minimum 10 days requirements. And you have to be positive for 50% of all of these days. So 5 of these 10 days have to be profitable. And you have to reach a profit target. And this is just a hypothetical payout the user is going to get. After that, you qualify, you immediately move on to verification. You get exactly the same account in exactly the same configuration. The only difference is you have 60 days to do that instead of 30 days. And you have only half the target. That means you have to make 5% within 60 calendar days. But the original rule still applies. 10 days, 50% profit, 50% profitable days, and maximum drawdown and daily drawdown. So basically, this is 25% of the target of the original, like after an evaluation account, because you have double the time and you have half the target to make, basically. You see there is already a very steep curve towards the no goal. And after you qualify on that, all the icons are greens, exactly the same. You go live, you get again a new demo account with exactly the same configuration. The only difference is everything you make on that account on payday, 50% of that will be deposited to your Enfoid account, and you just make a withdrawal or keep it there or whatever you want to do with it. We actually have a few American traders. They use that as investment. They trade prop, but they never make a withdrawal because of the 9% interest rate, 9.55 actually.
Someone's asking a question here. Paige is asking the question, where can I find all the info or more? Is this on your website, and what is the website, please? So I think I can answer that one, Paige. Paige, it's actually better to listen to what Mario's got to say today, because the website's got it all, but I mean, man, there's so much to take in that you need someone to talk you through it, and I needed Mario to talk me through it about 10 times before I got it. If you want to go to the website, it's enfoid.com/trading nut. Actually, if you click on Mario's photo above the player on the page, if you're on the web page, then it'll take you straight there as well. And so there's a special offer. Do you want to go through that, off the difference with this trading nut offer versus what the normal guys will get?
Yeah. Well, we are all in the same gang, so we thought about making something up, and like I said before, the free money thing with the IB stuff, and we're just gonna do the same here. If you enroll using that link, I didn't mention that actually before, that you actually have to pay something. I maybe should get into that. There are two ways to enroll. One way is a free way. That means you have to be a community member on the Swingfish project, and you have to be known by some of there are some people that call first mates, like they know what's going on, and they are a long time here, and basically you have to be there, and we have to have the impression that you know what you're talking about, basically. And then the company will pay for everything, give you an account, make sure you're gonna get enrolled like everybody else, but there is no security payment to be made at all. But this is gonna take you at least 3 months to get done, because there's a major cost to the company to that, because we secure the funding actually with insurance, and these insurance policies are very expensive. So the company will pay for that, basically. If you don't want to do that, if you just want to skip all that, you don't want to, you can pay for the insurance yourself. Basically, what you do is you deposit 0.8% of the balance you're gonna trade later to your Enfoid account. This money will not be taken away. This will stay on your balance. You just cannot withdraw it, but it will stay there. It will gather interest, and once you qualify, that means you complete the verification trading. This lock for the withdrawal will be removed, and you can just take it back out. This is just So the trader has some skin in the game, so to put it that way. And so we see they are serious, because we have like last month we had 4,200 signups and for free memberships, and we have a completion rate of 0.6%. This is just a major admin effort to take, and the people talking all the time, and they're acting like they're the big fund managers and whatever, and then they trade for like 2 hours and they broke already the first rule. So, and to bypass that, we have this fast track thing. You say, okay, I know I can trade. The rules are simple. There is no fine print. This is a no-brainer, because there's basically no risk to it. You deposit the 0.8%, you go to the evaluation and the verification, and you take back your money, or you leave it there and it keep gathering in the rest or whatever. And if you do that with this link that's on the TradingNode website, if you enroll, as example, for a $100,000 account, that means you have to deposit 0.8%, which means $800. We're going to add another $200, which means you're going to have an initial balance of $1,000 instead of the $800 you deposit. That means the moment you qualify, you will already be in profit by $200, basically. So there is no downside to that, to the trader or to the client at all. This is just something we do. This offer is only for a 100K account. That means if you deposit $800, we're gonna actually extend your account balance to $1,000. But the same rules apply. There will be nothing different at all. Also, if you enroll fast, there is no requirement of joining the community or whatever. You can just do your thing and do whatever. But if you're in the community, you're gonna get Discord notifications if you're close to the limits and stuff like that.
Questions come in. What's the highest funded account that they can get?
$700,000, but this is you cannot do that with 7 mouse clicks. There is some requirements to it, because Singaporean law requires to get your brokerage license, which we do, but not if I don't know you. Just let me just put it that way. The biggest immediate signed up account I have right now is 300,000, and we usually enroll them with 150,000. We insure the account with 228,000 or something like that. So you're gonna get it a lot cheaper too. And then after some time, with 1 or 1.5 months, we're just gonna double the balance. The listing, like off the menu, a la carte enrollment is $100,000, the biggest one. So if you don't know me, if you don't talk to me, and you don't know anything, you just sign up, new account, everything new. I never heard of you again. I never heard of you before. 100,000 is the max. But if you know what you're doing and you're willing to make the deposit, I can triple that in the second month of live trading. And anything higher than that will require a license. And you don't have to pay for that. You just have to come to Singapore, have to go to our office. We have to make there's also some legal aspect to it. If you enroll for 100,000, you're just a freelancer. You're just a contractor. So legally, you don't have to pay any capital gain tax, because you don't gain any capital. You just trade a demo account, and we gain the capital. We just pay you for doing so. So this is like a salary or like a contract. You just get paid for what you're doing. So on the legal side, on the tax side, for you, this is just income. This is no capital gain of any kind. But if you enroll with a higher amount, that's why there's a big gap between 300,000. Then the next step is already 700, and it's gonna be a lot higher than that, because the license fee is really high, and it's just not cut it. So, but if I trust you, if I fly you into Singapore and pay for your hotel and make sure you're gonna get a license and all of that. At that point, we know each other already, and then trading more money is not really a big deal. But there's something I would like to add. Profits are not what the system is after. We are up. High volatility is not what the system is after. If you say, oh, I can make 10% in 3 days, that's not what the risk management want to see. This is very, very, very important. If you make 2.5% a month, I just really want to stress that. If you make 2.5% a month, I can pretty much guarantee you $300,000 of funding in less than a year, because you are the prime trader. You pose no risk to the company, you make steady returns, and this is what gives you really, really high funding. But if you enrolled with $50,000 and you have a 10% account volatility, you're never gonna get there, never, because you're posing a major risk to the company at this point. And most people don't really understand that. Like they go, oh, I'm gonna make 10% in a week. Yeah, that's good for you, but you're gonna get your 2.5 grand in, because that's what your payout will be. But that's it. You're never gonna get more funding, because the risk is just too great that you're gonna lose 10% at the same time.
Guys, any other questions on the Enfoid prop firm and the trading nut offer? Everyone understands it?
Oh, I just see there's a comment on overtrade and don't hedge. We are throwing the wrong. Oh yeah, these people get paid from courses and membership, not the trading. That is so true. Yeah, that's why I don't do that. Sorry about that. I didn't see that comment on the trading nut YouTube.
Cool. Well, I think that's a wrap, Mario.
Oh yeah, it's just one quick. The same guy asked about. That's why the options and futures trading is only in-house. You have to be sort of an employee or an employer to do that, because then it's a lot more easy to get insurance and this kind of stuff, and the brokerage license. This is a lot more easier if you're an employee. That's why there is also a max cap of $300,000. Just want to quickly answer that.
Yeah, so guys, there's if you're on that page still, if you're not on YouTube and you're on the actual page on Trading Nut.
Sorry, can I just answer one more, because I went into the yeah, actually it is a gamble. Sorry, somebody on Trading Nut YouTube channel just asked that. It is a gamble, 10%, but we have a 10% profit target on the first test. The evaluation trading has a 10% profit target, but this has a purpose. This is simply to put pressure on the trader, and the risk management can actually see how you perform. I just want to stress that if you don't make the profit target, that doesn't mean you failed. If you follow the rules, if you don't break the rules, if you make some money, that means the account is not in a loss after 30 days, but you didn't make the 10%. That's not a problem at all, because profits are not part of the rules. This is just being imposed on the evaluation accounts to give you a goal, to get somewhere, and to put pressure on the trader so we can actually see how you handle. Like if you're this is a serious situation, you have to make 10%. So, and we can see how you're going to trade. If you're just going to gamble, then yeah, you're going to disqualify yourself at some point. But if you are a serious trader and you just keep it going and your time expires at 7%, you're just going to get a new account. Nobody really cares. You don't have to make a deposit. We just act like the first account never happened. And actually quite a lot of traders enroll and they trade several accounts because they have a fixed strategy. Like they have a day trade strategy and they make like 5% a month or whatever. And they have to adjust to that. And then they just keep doing that. And they keep getting new accounts, but they don't fail the evaluation because they didn't break the rules. I just want to make it sure. If your account is in profit and you didn't break any rules, no hard feelings, you get a new account, you start over, all you have lost is time.
Any other questions there on the YouTube chat? I can't see the YouTube chat.
Yeah, if just one quick follow-up. If you make 2.5% in evaluation, you don't qualify. Yeah, that's right. You being forced to make the 10%. This is not me being a dick, basically. This is also an insurance thing. The insurance actually forced us to have track record for these two accounts, and we basically have options against the equity that the trader trades with. And like on a black swan event or something like that, like there's a flash crash or something, and you get margin called or whatever, the insurance will actually compensate us for this loss. So every loss that's been greater than 10%, I have actually insurance coverage for that. But the insurance will only grant that if they have a trading log of the trader. So, and that's why I cannot really say, okay, you are 9.8, let's just make you pass. I cannot do that. But if you, like I said before, if you make the target in 3 days, like we have literally traders who don't do that, and but you have to fulfill the 10 trading day rule, because this is part of the deal. I don't mind if you trade micro lots for 6 days. I don't really mind, because this is just something the bankers want to see. You need to have at least 10 trading days. So, okay, let's make 10 trading days. I don't care.
And if anyone's got questions after this, what's the best way for them to get them answered?
On the website chat, where there's we have 2 people, myself and 2 more people that are always on the website chat, basically. And or you just join the Discord. That's basically then you have 24/7. There's also, if you are actually enrolled as a prop trader, you're gonna have a special role. You have access to a special channel where only prop traders are in, so you don't have to deal with all the kiddos. This is just like a handful of prop traders that actually in the Discord, and you can talk about this special prop trading stuff and get experience from other prop traders that are already live and what they're facing, what kind of problems they have, and so on and so on.
Yes, I like this because it's just so different from the other ones out there that I've seen, like whereby A, you get interest on the money that you deposit, B, you don't, if you don't meet the target, you don't you're not kicked out the door, you get extra chances. Correct me if I'm wrong in any of the stuff. And just even being able to communicate with the other prop traders, some guys that have been around for years, I'm guessing, who know their stuff. It gets you in the door there. So guys, go and check it out. As Mario said, if you do need questions answered, which I did myself, then obviously you see that little blue box at the bottom of the corner of the screen there. That's what you want to click when you get onto the website there. And yes, there's that $200 trading offer as well. So good. I mean, what do you have to do again, Mario? You've just got to make your money.
Click the link, and then we're good to go.
Yeah, and then
the $200 is gonna be released after the first profit payment, but all the rest of the rules apply. So if you enroll for 100,000, you have to deposit $800. The moment you complete the verification, the lock is gonna be removed, and you just make a withdrawal. This is the Enfoid account is just like a bank account in the cloud or something like that. So. Of course, if the money stays there, this is good for us because every cent is equity. That's why we do it, but we do it. But if you want to take it back, it's your money. It's your property. We cannot prevent you from taking it back. But there's one more thing I wanted to point out. If you just cannot make it, like you're enrolled and you say, okay, I cannot make this 10%. This is just out of my league. Then there's a restart of accounts. Like I mentioned before, you didn't make the target. You don't break the rules. You get a new account. But instead of restarting, you can just quit and just say, okay, this is not my thing. We take back the account, you get your money back. Because we can just give the account to somebody else. That's so basic. Because the insurance is still valid at this point, because you're eligible for a restart. So no hard feelings, you just go. But if you break the rules, I didn't mention that, and this would not be fair if I don't say it. If you break the rules, that means the funds are held, because the insurance will expire. The company has to pay for the insurance up front. And if you break the rules, I cannot claim it back. And so you cannot claim your money back. But that being said, if you enroll again, let's just assume you fail the first time because you're a high-risk trader or something like that, or you're living on the edge or whatever you do, or there is something happens, some news event, and you got slipped or you didn't have a stop loss or whatever, it doesn't really matter. You're disqualified because you broke the rules. If you enroll again, you have to make another deposit because you broke the rules. The first one doesn't count anymore. You qualify then, you're immediately eligible for the second deposit you made. The lock will be removed. So let's just assume you enroll twice for the same amount, which you don't have to do. Let's just assume you enroll twice for 100,000. That means you have a account balance of 1,600. The moment your verification is completed, you already can withdraw 800. The lock is being removed from the second 800. And if your first profit payment is higher than $800, the lock is going to remove from the second one as well, from the first one as well. So let's just do some math. This is not compensation. Let's just assume you go live, you make a $2,000 profit on your first month, and you have 1,600 already on your account because of what you paid in. That means you are up 3,600. And after the first profit payment, you can withdraw the full 3,600. So there's no fee of any kind except the transfer fees, but that's a different story. Like if you get paid by PayPal or whatever. But you get the idea.
Yeah.
There is no fee from our side. The moment you qualify, then when you qualify and when you go live, this is then win-win for everybody. We make money, you make money. There's no point of holding your money. And we're just going to remove the lock. And if you're in need of the money, you just withdraw it all. We don't care. This is just how it is. This is your money. It's going to stay your money. And the moment you qualify, you're going to get it all back. But if you break the rules, you have to enroll again in order to get it back.
Now, last question just popped up here. Where are the funds held? Good question.
Most of the funds are held. Well, that's actually a mixed kind of thing. Most of them are held. It depends on where you pay, how you pay. Some is left over on PayPal, or we have pretty big on Alipay, on Neat in Hong Kong, DBS Bank in Singapore. So the investment funds, most of them are held on. If you're an investor, not a trader, if you like put 100,000 on your Enfoid account just for the interest, that's a different thing. Most of these funds are held on DBS Bank in Singapore or the Handelsbank in Germany.
Cool.
Or TransferWise in New York if you're a US dollar client. But yeah, that's where they're basically held. But the money you pay in as a trader, this is, I have to be honest here, this is mostly cash flow. This is not being invested by the company at all. Okay, if there's like a huge amount of money on the PayPal account, we're going to make a withdrawal and put it to work in some way. But let's just say 80% of the money that comes in from the prop trading enrollments is mainly used for cash flow. So we don't have to make withdrawals from our larger investment accounts. As example, we are pretty heavy in bonds or stuff like that. And making a withdrawal from the Schwab accounts is going to take forever. It's going to cost major amounts of fees. And we just avoid that by using this money as cash flow. But it doesn't jeopardize the whole system as a whole, because there has to be cash flow. Actually, if you log on to the system, if you want to invest, there's a max cap. You can invest $10 and you're going to get next weekend your 0.175% interest off this $10. No problem. The system does it all automatically. But you cannot invest. You cannot drop like $3 million. That's not possible, because this system works only because the company has actually the cash flow. So if you like drop like $3 million today and you want it back next week, and we have some investments going on with this $3 million, we would not be able to pay you back. And that would makes it a Ponzi scheme, basically. And to avoid that, you cannot pay in more than the actual cash flow we have available at this moment of time. And that's why there's a max cap. If you go to the transfer page and you click on deposit, or in your notification emails, there's always mentioned a max cap. This is made sure at all times that you always know the max cap. So if you drop like $3 million, like I think the max cap is 2.6 or something, So if you would make a $3 million deposit, we will send it back, because this would offset our liquidity. Let's just assume it's 2.4 million. I'm not so sure. This is because it's basically changes every week. That would offset our liquidity by $600,000, and this will put the whole system at a risk, and that's why we don't do that. We are, again, conflict of interest. We have to be liquid at all times. So if on next Friday all the clients want their money back at the same time, we would be able to pay them. That's basically what it comes down to. But if you drop 3 million, that would mean next week we would, and if next week everybody want to ask for a refund, we will be 600,000 short, and that's actually illegal, by the way. But it's not being done because it's illegal. It's being done because we want to be liquid at all times, and then that's why we can do this cash flow thing. So the money is somewhere, some is here and some is there, is depending on how much cash flow is required on what asset. Like I trade, we have like 800,000 or something like that on the swing trading account, but this is on with IC markets. I can just make a withdrawal, but it's gonna take 3 days to happen. But if somebody wants a refund for $500, I'm not gonna make a withdrawal from IC markets. I'm just gonna pay by PayPal. That's basically what it comes down to.
Yeah, guys, look, if you sign up, you're going to see this figure every week come into your inbox, and you'll sort of see it go up and down and what have you. I've seen it in the last few weeks. It's quite interesting. So, look,
we make sure that in every notification email, you're going to see this maximum amount. So nobody can say, okay, I want to drop 5 million. I would not be able to accept that like this, unless we would make a special deal or something. But if you're just going to make a bank transfer for $3 million, this will bounce for sure, because this will put the whole system at risk, and we don't want to do that.
So Pips has asked another question. If you start with a $100,000 account, and after a period, can you advance to a $200,000 account?
Yes, if you're a nice trader, let's put it that way. Like I said before, 2.5%, that makes you a really nice trader. Actually, the loss versus profit ratio is one of the key things. If you enroll for free, you cannot advance if your loss versus profit ratio is lower than 1.1. That means if you have a $1,100 drawdown and you only make a $1,000 profit, that makes you a bad deal for the company, basically. But if you have a very, very small drawdown and you make decent profits, then it's usually 2 up to 3 months. We're gonna increase you already by 25% or maybe 50%. Or you talk to me directly and we can make some deal about that. But in average, if your returns are higher than 2.5%, but I mean by higher, I mean it's already okay just to make 2.5%, because that makes you a very, very low risk. You're gonna get higher in funding. So on average, the good traders double their account within the first years. Within the first year, sorry. One, not many.
Okay, brilliant. Look, I'm going to end the webinar there, Mario. It's 1:45 in the morning for me,
long already,
so it's late. We should, had we not had the hiccup in the first hour, but oh well, them's the breaks. So look, guys, head over there, tradingnut.com. You'll find it under a link to this under Mario's episode, or you can go over to enfoid.com/tradingnut and you'll get this offer for the time being. I'm not too sure how long it'll be up there for, so guys, go and check it out ASAP. Any last words, Mario, before we wrap up here?
Yeah, well, like I said, feel free to hop into our communities. That's swingfish.trade. Like I said before, everything is free, including the money. Not kidding. I trade live myself every day. Actually, it shows I'm live because I'm streaming that on the Swingfish YouTube channel too. And I have, like I said, I have a block draft. You can actually see, like I'm pressing the button, I make a screenshot, and I put it on on my blog, and you can actually see the draft if you click to trading room already. Usually put a meaningful reason when I have one. Sometimes I do stupid trades too. I'm just a normal trader like everybody else. But if I do it, I will usually mention it, that this is not something you should do. And you see more than often that I do that. Like I said, I'm just a normal trader like everybody else. So you see my reasoning and you see my exits and whatever, and then you see how it's developed live. My live streams are usually very, very, very boring because I'm terrible in entertainment. And if a trade takes 6 hours to play out, well, then we are going to have a 6-hour live stream.
The music's good, though. I like the music. With the one I saw the other day.
All right, I'm not cutting them short like most of these whatever nonsense people. They make a recap and they say, okay, I did enter here, like the hindsight trading. I bought like 7,000 shares of Apple and I sold them here and I make a $7 trillion, and this is how you do it. This is something I don't do.
Cool.
I started the live stream when I entered the first trade and I exited when I'm done. But I started to make recaps, but they are based on the original live stream. I would never make a recap if I cannot prove I actually was in this position, and you can actually see when I'm entered. This is also something I'm trying to be as transparent as possible. But I just want to stress this again. I don't here to prove anything. I'm not a good trader, I'm just a trader. And I'm just trading what I'm seeing and whatever, and I do what I do, and okay, I have a pretty good reward. If you cannot see it if I'm live. If you click the trading room on the website, when the live stream is not running, you can actually see my stats. And so I'm usually higher than 20 or 25%, like all the time, except I'm having whatever. But usually I'm higher. I had actually in 2018, I had a month where I was over 80% on returns. So, but I don't brag with that at all. Like, once the 30 days are over, these stats just disappear. I don't show my FX book or whatever. This is just, we just want to keep it casual and get together somewhere.
Cool. Well, look, Mario, I'm going to end the stream there. Thank you very much for coming on. It's been fantastic. Sorry about the technical hiccups in the first one, guys. I might try and sort of piece some of that together with this one and put it out as a replay. Look, have a great day, everyone. Thank you very much for joining the live stream, and I'll see you on the next episode of Trading Nut.
Yeah, it's pretty good. I hope it wasn't too boring for everybody because I talked too much.
No, it was great. It was great. Thanks, Audio Beast. All right, guys.
All right.
Cheers.
All right.
See you later.